Today's recording is going to be Chapter 10, Problem 10-6B. And it'll take me just a second to get that loaded up for you. So hold on just a minute. I'm going to share my screen with you. And today we're going to be looking at Problem 10-6B and Cengage. And what we're going to be talking about today is amortization and depletion. So what we need to look at is the data that's going to be related to timber rates and intangible assets during the current year ended December 31st. On December 31st, the company determined that $3,400,000 of goodwill was impaired. And so what we first need to talk about is what goodwill is. Goodwill sometimes results from mergers with other companies. It's an amount that would be paid that is above what the assets are really worth. So we sometimes will pay for the company's reputation. That's an example of goodwill, but it's an amount that we are willing to give to buy another company that is worth more than just the assets itself. And so when we talk about goodwill, it is considered to be an intangible asset. An intangible asset does not have any physical substance associated with it. We can't touch it, we can't see it, we can't feel it. Intangible assets are still assets, and they're going to result that you're going to record them on the balance sheet. Usually intangible assets have their own classification on the balance sheet, so they're not going to be with the current assets, they're not going to be with your plant assets, they're going to have their separate category. When we talk about goodwill, we talk about a type of intangible asset that is going to be written off if we have found out that the goodwill has been impaired. And we'll put that amount in a loss account called loss on the impairment of goodwill. And we would record that as a debit to the loss account, and then we would credit the actual asset account, goodwill itself. But in the first part of these transactions, they're wanting us to look at whether or not goodwill would be considered to be impaired, whether it would be called amortization, or whether it would be called depletion expense. Goodwill will be impaired when it is determined that there has been an impairment of maybe a reputation of a company. And so in Part A, what they're wanting you to do is to determine the amount of the actual impairment. In this case, the amount of the actual impairment for Part A is given at $3,400,000. So the amount that we would record here is $3,400,000. Now in B, they're talking to you about some governmental and legal costs of $4,800,000 that were incurred on September the 30th when they were getting a patent. So this patent, in effect, is costing them some legal cost of $4,800,000. Those legal costs will be the total cost of the patent itself. The patent is also a type of intangible asset, and patents would result when we are buying a special process from a particular company. This process or this type of of um, um, invention, we might have to register it with the government, and those costs are also considered to be legal costs. A patent is also an example of an intangible asset, and these patents will have an economic life of 8 years. Now, a patent can have a legal life of as much as 20 years, but if we've determined that the patent will probably be used up or become uh, there might be some more technology that we would be able to replace that patent with, we can shorten the legal life. The useful life of this patent is going to be 8 years. That's what we're going to use to determine something that we call amortization. Now, intangible assets can be amortized, and amortization is nothing more than reducing the cost of the asset over its useful life. In this case, the life of the asset is going to be 8 years. You might remember from previous problems that we've done, when we buy a tangible asset, that is a physical asset that does have physical properties associated with it, like a truck or a piece of equipment or some machinery. Those are examples of tangible assets. You might remember that we depreciated or we wrote off the cost of the asset over time. With a patent, we will also write off the cost of the patent over time. We just call it amortization rather than depreciation that we use with a tangible type of asset. So there is an account that we call amortization expense that would be debited when we are amortizing the legal cost of a patent. When we're writing off the patent over time, we call it amortization. The credit will go into an account that is called accumulated amortization. That's very similar to our accumulated depreciation. Accumulated amortization is a contra asset account. So the accumulated amortization would be listed underneath the patent account on the balance sheet. And then we would determine a book value for the patent that would be very similar to the way we calculate accumulated depreciation and the cost of a tangible asset on our balance sheet. So patents can be written off through accounts that we call amortization. And I'll show you how to do that in the second part of this problem. What they want us to put in the first requirement is the number amount that we would record for the amortization of the patent. And so I'm going to use my calculator to help me determine that. So what I'll do is I'll put in the cost of the patent, which were the legal cost of $4,800,000. I'm going to divide this $4,800,000 by its 8-year useful life. And because the amortization is stated to be at 1/4 of a year, I'm going to multiply this annual amount by 3 months divided by 12 months, which would give me 1/4 of a year. You could have also multiplied it by 1/4, and that would have given you $150,000. That's the amount of amortization that would be recorded for the patent. In Part C, they're talking about timber rights. Now, timber rights are an example of a natural resource asset. They bought the timber rights on a tract of land, and they bought them for $2,975,000. The stand of timber is estimated at 12,500,000 board feet. That's the total amount of board feet that they think that they're going to get once they have cut the wood from this tract of land. During the current year, it tells you that they actually cut 4,150,000 of board feet of timber, and that they cut this and they also sold it. When we talk about a natural resource asset, we will be using an account called depletion. And what we're going to be doing is we're going to be depleting the timber that we have purchased to use to cut for boards. Depletion is very similar to depreciation. We would debit the depletion expense for the amount of the board footage that we cut per year. This method is also similar to the units of activity method that we talked about earlier that we could use as a depreciation method for our plant assets. So what we're going to do in Part C is we're going to take the total cost of the timber that we purchased and we are going to divide that by the total amount of board feet that we believe that we're going to get from the entire stand of timber. This will give us what we refer to as a depletion rate. The depletion rate is 0.238. That rate would be multiplied by the number or the amount of board feet that is cut per year and sold. In the first year, they cut 4,150,000. So I'm going to multiply my depletion rate by 4,150,000, and that will give me 987,700. This is how you calculate the cost of impairment for goodwill, amortization for the patent, and depletion for a natural resource asset. In part 2, they want us to record the journal entries for the adjusting entries to record the amortization, which would have been on the goodwill. Excuse me, it's not the goodwill. The amortization, which would have been on the patent. The depletion, which would have been on the timber rights, and the impairment would be recorded for goodwill. So for Part A, this amount of $3,400,000 was related to goodwill according to our instructions. So what we have to do is we have to record the $3,400,000 as a loss from the impairment of goodwill. Losses have normal debit balances. So the loss from impaired goodwill would be debited for the amount of the impairment, which this company has estimated that the amount of the impairment is $3,400,000. We will credit our actual goodwill account. This is reducing or taking off of our books the intangible asset goodwill for $3,400,000. So this is the adjusting entry that we would record for the impairment of goodwill. Notice goodwill is credited. Goodwill is credited because it's an intangible asset, and we're reducing the value of that intangible asset once it becomes impaired. So again, goodwill is like the reputation that's built up in a transaction that might have resulted from a merger. It's where our company would be willing to pay more than just the assets of the company because the reputation that was involved in buying that particular asset. Intangible assets are set up on the balance sheet as a separate category. And so we would have goodwill listed as an asset, the remaining portion of whatever the amount of that asset was that we had determined was the amount of goodwill to start with. So I want you to realize that when we are impairing goodwill, we're reducing the asset account. For the B adjusting entry, we were working with a patent, and a patent is an example of an intangible asset. But with patents, what we do is we amortize those. For goodwill, there is no amortization account. But for a patent, we'll use an amortization account called amortization expense on the patents. The expense account is debited for the amount that we have written off the patent. That amount was calculated in Requirement 1, Part B. it was $150,000. We will reduce the patent account, which is our intangible asset, for $150,000. So when we amortize a patent, we are deducting from the actual asset account the amount of our amortization. Patents will show up on the balance sheet in the intangible assets section of the balance sheet. Amortization is an expense, just like losses are losses, and they will both go on the income statement. In Part C, we're going to do the adjusting entry for depletion. Remember, natural resource assets are depleted. The natural resource asset that we have bought are the timber rights for this particular example. Natural resource assets can go in a category that is located underneath plant asset section. It will be called the natural resource assets, but it'll go underneath the plant asset section. It is not considered to be an intangible asset. The boards are tangible for us. The wood is tangible. So it goes in and a place underneath our plant assets for natural resource assets. When we deplete natural resource assets, we will debit an account called depletion expense. We're going to debit that account for the amount of the depletion, which in this case was $987,700. We will credit a contra asset account called accumulated depletion. Accumulated depletion is $987,700 is equal to the depletion expense for this period of time. So that's how we record journal entries for intangible assets and natural resource assets. I hope you understand what we've talked about today. I'm going to stop sharing this video with you. And I'm going to stop recording for today.